Welcome to today's session on crypto taxation in Malaysia for 2026. As we all know, we are nearing the end of 2025, so I'm sure many of you have invested in crypto, probably made some gains or even taken some profit along the way. And the big question now is, how do you deal with the taxes for all of that as we head into the year of 2026? That is really what the session, today's session is all about. And to introduce myself, my name is Xiaoying. I'm from the Halogen Capital team, and I'll be your host for this webinar. So, okay, and today I'm also very fortunate to be joined by two experts in this space. Let me introduce them a little bit. So first up, we have Han Liu, founder and CEO of Halogen Capital. You can see him on the screen. So he's a fund manager and fintech entrepreneur with a very strong passion for improving financial literacy in Malaysia. And that passion led him to co-found Ringgit Plus, which is Malaysia's leading personal finance platform. And besides that, he's also a certified financial planner in which he has helped many Malaysians build their wealth across both traditional and digital assets. So today, he will be here to share practical insights with us on how do you approach crypto investing responsibly. And besides that, joining us as well, you also have Tian Yi, a tax partner at PwC Malaysia. So she brings more than 20 years of experience in the tax advisory space, supporting businesses and institutional clients across a wide range of tax matters. And with deep experience in the ever-evolving tax landscape in Malaysia, including digital assets, she has also been closely tracking the developments in the crypto taxation field as well. So today, she'll walk us through how Malaysia's 2026 tax framework applies to crypto investors like yourself. And in this edition, we have bonus insights from the very recent budget 2026. So, all right, that's a little bit about both of them. And before we jump in, just a quick note on how the session will run. So we will start with insights from both speakers, both Han and Tian Yi, and then we will follow through a Q&A session in a bit. So just a quick housekeeping. So feel free to drop your questions in the Q&A box. I think all of you should be able to see it. Then drop your questions in the chat at any time, and we will address as many as possible later on. So with that, I think let me hand things over to Han to kick off the session. So Han, over to you.
Thanks, Jiaying. Morning, everyone. Morning, Tian-Yi. Hope you're good. Looking forward to see what's in store for us today. I'm glad to represent Halogen, I guess, in this session. This is the third time we've done this already, and happy to give everyone a little bit insight into what Halogen does, how we enable safer crypto investing here in Malaysia, as well as then very short from me because everyone's very keen to hear from Tian-Yi actually on how do I manage taxation when it comes to crypto matters. So that's like a little down there. And as well as what's changed in budget with regards to investing, the unit trust space or the wider investing space for taxpayers out there. And then we try and leave some time at the end. I'll be less than 50 minutes, hopefully. Then give Tian-Yi the bulk of the time so that there's a lot of time enough for questions at the end. So first one I'll go through is what Halogen does and why this is the slide here. Is it too late to buy Bitcoin? Bitcoin today is a bit less than $126,000 US, or 525,000 ringgit per Bitcoin. A lot of people ask me this as a crypto fund manager. Is it too late to do this already? A little bit about me first. You guys got the introduction already. I've been in capital markets and financial services for more than 18 years now, across banking, insurance, asset management. Yeah, I mean, been in the crypto space for many years now. More recently, obviously, I've founded Halogen and run Halogen. I'm a fund manager here at Halogen. You can find me on X if you're interested, but maybe a little on Halogen actually, not so interested in me specifically. Halogen is Malaysia's first licensed, capital markets licensed fund manager specializing in cryptocurrencies and digital assets. We've been around for almost 3 years already, so since early 2023. So we're coming up on the end of our third year here already. We run, as most fund managers in Malaysia, we run funds, we run private portfolios and mandates. We manage money on behalf of investors, both individuals as well as corporates and institutions. So we do have public funds with crypto inside. And we also have other asset classes like bonds, equities, etc. Right, but we do really specialize in this asset class, crypto. As a fund manager, obviously, we are supported by very much by institutional partners. A Big Four fund auditor. We have a Big Four fund tax advisor. So Tiani herself has advised the company Halogen, as well as been a tax advisor for our funds for a good 3 years already. So Tiani is the expert on crypto taxes these days, more so than us, of course. And obviously, all our funds are Sharia compliant. All our crypto funds are Sharia compliant across. And we wanted to get as broad as possible opinion on Sharia compliance. So we have a panel of 3 Sharia advisors that we use to make sure we are very compliant on that side. So when I tell people I'm in crypto fund management, a lot of people go, huh, Han, what does that mean? But maybe not for y'all. You guys seem to be seasoned experts already, I guess, our audience here. The difference between doing it yourself, you have a brokerage app or you have an exchange app. On the traditional world, you have these apps like Moomoo and M Plus Online and iTrade and Rakuten to trade your own equities, right? And likewise, on the crypto side, many of these exchanges you see very familiar to Malaysians these days, the Luno, Hatta, Synergy, Tokenize of the world. But if investors don't really want to do it themselves, I don't really, trade myself. I don't want to set my own levels. I don't want to be. I have my day job, right? Isn't it your day job to do investing for me? Indeed, it is our day job to do investing on behalf of investors. That's what the buy side is for, fund management, where, another few common names you will hear, AHAM, Principal, Public Mutual. We sit on this side of the table, right? We invest on behalf of investors who maybe either don't know or don't want to know or don't want to bother themselves with their own investment. And they need experts to do it on their behalf. We're happy to play this part in the ecosystem. But then maybe I take one step back and explain to maybe some of you in the room who maybe are a bit confused when you use the word digital assets. Han, you say crypto sometimes you use the word digital assets. What's the difference, and what does it all mean? I'll explain in one slide, which is the difference between when you hear people say digital assets, crypto, Bitcoin, what does it mean? The best way to think about it is that digital assets is a very broad category, which includes cryptocurrencies, so a much smaller category. And within cryptocurrencies, there is Bitcoin, right? The largest cryptocurrency, the first created in 2009. It's the largest by far, by big margin, right? I think it's over half the overall cryptocurrency space. And within cryptocurrencies, as you know, you might have heard of other cryptocurrencies such as Ethereum, Solana, Ripple, etc. But that come out either as trying to copy Bitcoin, trying to improve on Bitcoin, trying to do something different, but all based on something called a blockchain, using blockchain technologies. It's a new technology that's been created since 2009, where data can be put onto blocks that link to each other, right? And it's a whole technical conversation there, which I won't get into today. And then a broader scope of assets which are then on a blockchain includes not just cryptos, but things like real assets put on blockchains, art, NFTs. You've heard of this term NFT, digital art. And more lately, you're hearing governments get involved too, CBDCs, central bank digital currencies. So those things, a broad umbrella of digital assets. So now everyone here knows already what's the difference. In Malaysia, we use the term digital assets frequently because the regulator, SC, and Bank Negara both use this term very frequently, and they use it to describe how does it play with the regulations. Luckily, in Malaysia, we've had crypto regulatory clarity since 2019, so more than 6 years already. In fact, if you look at the prescription order for digital assets and digital tokens, it was Lim Guan Eng's signature on it when he was Minister of Finance Minister. And what Bank Negara and SC, the Securities Commission Malaysia, both agree is that while you shouldn't really, or you cannot really use digital assets, cryptocurrencies as legal tender, means don't force a cafe to accept your crypto as payment for your coffee or for your lunch. You can use digital assets for the purposes of investment, right? So what that means, investable class of assets. And because you're thinking of it as an investment, crypto is recognized as security. As a security as per the CMSA, the Capital Markets and Services Act 2007. So it's given the same kind of treatment as stocks and bonds, right? In that it is regulated by our securities regulator, not so much our central bank, right? And also, obviously, the Sharia Advisory Council of the SC has prescribed or ruled that trading, investing in digital assets which are listed on their list that they've reviewed are permissible from a Sharia compliance perspective. And why does it matter that, who cares if Bank Negara or SC prescribes it properly, right? It matters because today, the digital asset class or crypto asset class is a very large asset class already, right? Maybe 10 years ago, it was small, right? $5-6 billion. For your context, $5-6 billion market cap. I think like there's over a dozen, 2 dozen equities in Bursa, Malaysia that exceed that. So 10 years ago, it was, about $6 billion. Today, it's almost 4 trillion, right? $4 trillion in market cap is large, right? It's larger than pretty much every single equity in the whole world, right? Maybe exception of Nvidia these days. So behind gold is number 2, right? And it's gone a lot of ways in the last 4-5 years, right? It's gone from boom to bust. It's gone from a very negatively viewed asset class to now highly institutionalized. Governments around the world are now regulating it. Governments around the world are accepting that it's here to stay. We've got to regulate it. I mean, Malaysia did that in 2019 already, and the US just did that earlier this year. And it's caused a lot of volatility in the asset class. Some of you may have heard of this in the news. Most recently, last month, the all-time high for Bitcoin, $126,000 hit early last month. So there's a lot of hype around this asset class. And we've been around for the last 2.5 years now, almost. We launched the first crypto fund in Malaysia and the first Sharia compliant crypto fund globally, right here in Malaysia in August 2023. We've done quite well. We've tracked pretty much the performance of Bitcoin since launch. In August 2023, we've got the best performing fund in Malaysia as a result in the last 2 years. Yes, better than all those technology and AI funds as well. It's been a very, very interesting ride for us at Halogen. But I suppose the question that some of you may be asking is it too late? All right, is it too late to invest in Bitcoin? What I'll say is, it hit all-time high just last month. It's down a bit since, so maybe it's not too late. Today it's at 107,000. We have a team of technical traders here at Halogen constantly looking at levels on behalf of our investors. Things like resistance levels. Where's the resistance we're seeing? Where's a lot of pockets of selling, either from spot investors, futures investors, as well as long-term holders. We're seeing resistance at the all-time high. We're also seeing another resistance pocket at 130,000. That's a huge resistance level. And in the short term, we're seeing some support at the 106 level. We're seeing a lot of buying happen at 105 and people were layering on top of 105,000 in the global markets. And then beyond that, obviously, there's 100,000, very psychological level that there's a lot of buying happening there. If that's breached, then you can expect further lows. So these are the kind of things that we do on behalf of investors. We give them short-term outlooks, help them make investment decisions with data. But what's next? What's next for crypto? Before I pass to Kenny, I think one of the main thing is that these are the key areas we're looking at. Like, it's not just about technical analysis. It's also fundamentals. And what are the fundamental drivers of the asset class at the moment? Can I go back? Hold on. All right. These are the key areas we're looking at. Number one, further regulatory acceptance of this asset class means We've seen things like the Genius Act and the Clarity Act pass Congress in the US. We're seeing MiCA in Europe. We're seeing a lot of developments also in Asia Pacific. Bank Negara themselves issued a asset tokenization paper last week. We're seeing institutional and corporate adoption of this asset class. There's something called the Digital Asset Treasury Company, both, i.e., companies, listed companies, putting cryptos onto their balance sheet. So these are not just governmental, but also corporate developments in this space. And then obviously there's a lot of new entrants to this asset class via listed wrappers. ETFs are the common listed wrapper in the States. Here we have the Bitcoin fund, obviously. In the States, the more common wrapper is the ETF, which drives more institutional and retail adoption, high net worth adoption, right? The other key area we're looking at, you really cannot escape it, is global macro. If the global recession does occur as a result of trade tensions in the last 6 months, it's honestly short-term bad for crypto, very, very liquidity sensitive asset class. Long-term, not bad, right? If you think about a decoupling of the world economies and world currencies and world reserve assets, a neutral asset, which is not government specific, means I'm not holding a US Treasury bond, I'm not holding a Japanese yen bond, I'm not holding a Chinese yuan bond, because I'm not sure who's gonna attack who, I'm not sure which financial system is going to win. I want to hold a reserve asset, which is driving the price of gold as well as Bitcoin, right? As a neutral reserve asset. On the other hand, there's macro factors like markets are pricing in a Fed cut in December. I don't think Bank Negara is going to cut anymore. We're at 275 in Malaysia, but the Fed is looking to go another cut in December and perhaps a couple more in 2026. But the one thing that's happening right now that's driving crypto prices lower is something called a liquidity squeeze. What this means is the US government is actually shut down. So federal workers, civil servants are not actually getting paid. And that drains liquidity from the system, right? If you're not getting paid, what are you going to do? You're going to sell some assets to afford your dinner, right? Or you're going to sell some assets to afford your car payments. And if this squeeze continues, you can expect crypto prices to continue getting lower before central banks, the Fed, Bank of England, Bank of Japan, Bank of China, People's Bank comes to the rescue, right? So these are kind of things that we look at from a fundamental perspective, not just technical. And then the third thing that we are looking quite cautiously at is the altcoins part of crypto, which is this cycle has been driven largely by Bitcoin, right? There's a metric called Bitcoin dominance, which has remained very stubbornly close to 60%, which means Bitcoin is 60% of the overall crypto market cap. And what this means is altcoins have alternative coins like Ethereum, Solana have lagged this cycle, right? It may offer upside, is what is our current position, but we're being cautious about it in the event that we don't see rotation occur. Mainly because a lot of the inflows this cycle have been through institutional flows, i.e. into ETFs, and it's hard to switch into altcoins beyond Ethereum when you're invested in ETF, right? So it's not as easy to switch as it were if you were in the native currency. So these are the kind of things we're looking at. A lot of people ask me, hey Han, I like your coverage. Thanks for all the info. Thanks for your technical analysis. Thanks for your fundamental research. Can I not invest myself? And for me, this is a funny question to ask, which is, hey, I can also buy crypto myself, right? There are exchanges, there are brokerages. And for me, I like this question because I realize not many fund managers in traditional world get asked this question. Do you ask your unit trust fund manager, hey, how come, why are you buying for me? Why don't I just buy myself? People do it for all kinds of reasons, right? Which is maybe they don't have the expertise, they don't have the time, they don't have the attention. I have my life, right? I have my job. I spend time with my family, my work. I don't have time to look at the markets, invest for my own portfolio. And that's what fund managers do, right? But other than that, in the crypto space, there is an extra bit, right, around what we do, why people choose us versus either going abroad to invest in overseas wrappers or assets, or even trading locally, right? The first is that I like to say we're the most trusted. Why? Because we are the first licensed entity here in Malaysia approved for crypto investing, right? And there's a difference. The main difference is that we operate on a unit trust basis, meaning trust structure, legal segregation with your crypto. There's just no legal commingling. Some people need that, some people want that. Some people may not need that. They may not care. Maybe they don't have that much. So that's why they don't care so much about legal segregation. But I think if many crypto investors were here in 2022, they understand the need to have this trust structure. We are unique in this aspect. I like to say that's why the word trust, it doesn't just mean trust me, right? It means trust in that framework, the legal frameworks that separate my assets from yours. Number two, convenience is key. I guess some people just don't have the time to go and look at the markets all day or every day. We have a range of investments here, not just our Bitcoin fund. We have an Ethereum fund. We have a multi-coin fund called Titans. We also have money market capabilities. So if you need to park some money while waiting, get 3 to 4% return, tax exempt, we can have that. And we manage portfolios on behalf of investors who maybe don't want to do it themselves, right? And one of the mistakes a lot of crypto investors tell me is, I made a lot of money, Han, but I forgot to rebalance my portfolio, and then I lost a lot subsequently, stuff like that, right? And last, I guess, related to today's session is also in terms of compliance, right? What do I mean by compliance? We are very fortunate here in Malaysia. The government and tax authorities are very, what's the word I want to use? Supportive of unit trust structures, right? Of the unit trust industry, of the fund management industry. We get a lot of tax exemptions across the income that we generate on behalf of investors. Specifically because we create these local capital assets. Our funds are all incorporated locally here, and that gives us certain tax exemptions, which perhaps others may not get. We're also highly Sharia compliant, and naturally we are audited and tax advised by Big Four. So we meet most corporate, high net worth corporate, and maybe if you're individuals anyway, you might need this, like in terms of your reporting, particularly when it comes to tax reporting, right? MFRS, hopefully, compliant reporting, right? When it comes to accounting standards and requirements, right? So these are the kind of things why people choose us, other than the fact that we're a very efficient structure, right? Like we have a Bitcoin fund, it pretty much tracks Bitcoin. You get the full Bitcoin exposure. This one is fairly passive in that it tracks Bitcoin fairly closely. It's very active in that we manage liquidity quite well, we feel. And not just we feel, it's evident here. You get full Bitcoin exposure, you get institutional custody, you get pretty much no drift. I think in the past year, despite trading and fees and everything, I think most people are pretty much close to Bitcoin, less than 1% away, less than 0.5% away, actually. We pretty much outperform all other venues. If you're going to ETF, I think the trading cost alone will be more than this. Likewise, exchanges. But you've heard enough from me the last 18, 19 minutes already. Perhaps now's the time for me to pass to the star of the show. Maybe I'll ask Tian Yi to unmute first, and we'll talk about taxes, especially specific to crypto in Malaysia in 2026. Hi, Tian Yi. Morning. How are you?
Hi, Han. Morning. Yeah,
Thanks for
for
joining
having
us.
me here. Yeah.
Yeah. I just want to, before I pass to you, I just want to say thanks so much for being the tax advisor for our funds and our company for the last 3 years. It's made you somewhat of an expert locally here, I think. So to everyone in the room, if you're looking for certainty when it comes to your crypto taxes, you can just call Tian Yi. If you don't want to call Tian Yi because you're scared, you can just invest through us. Like Tian Yi advises us, and therefore your investments already have the best the best people looking at it. And yeah, so just thanks again. I just want to pass back to you, Tian Yi. Thanks for joining us, and I'll let you go from here.
Okay, thanks, Han. Yeah. Good morning, everyone. So I think as introduced, I'm Tian Yi, a tax partner with PwC Malaysia, right? So today I'll be actually covering a few areas, right? So if you look at it, because budget 2026 was just less than a month ago, so probably something of interest to yourself. Therefore, I will actually be covering very briefly in terms of budget 2026 proposal, mainly on the personal tax side of the matter. Second is, Han mentioned earlier in terms of a halogen structure is actually a unit trust, right? Then you'll probably be interested to also know, right? So how is a unit trust actually taxed? And if you as a unit holder invest in a unit trust, then again, what is the implication? Right? Then thirdly, I will also be covering briefly in terms of taxation of digital assets in Malaysia, right? Because the government did recognize that increasingly there's been a lot of investment in digital asset. Therefore, in 2019, they did issue a tax guideline in respect of the tax treatment of digital asset to accord some level of certainty so that taxpayers will know then how to actually treat the taxation of a crypto asset. Okay. So without further ado, I will actually start off with budget 2026 proposal, right? In fact, for budget 2026, the theme of this year's budget is called the Rakyat's budget, and it's a reflection of government's continued commitment to inclusive growth as well as providing targeted support for Malaysians, right? And if you look at it, budget 2026 it actually expands personal tax relief to me in a very meaningful way, right? So firstly, if you look at it, the 1,000 ringgit vaccination relief, right? So the 1,000 ringgit limit remains the same, but what they have done in budget 2026 is that they have actually expanded it to cover all types of vaccine registered and approved for use by the National Pharmaceutical Regulatory Agency, MPRA approved vaccine. So long as something that's MPRA approved, essentially you can claim as part of your 1,000 ringgit relief. So in terms of life insurance premium and takafu contribution, currently there's already a 3,000 tax relief that you can claim. So what they have done is that they've now expanded it to cover children, right? So you can also purchase life insurance premium for your children, and you get to actually claim as part of your 3,000 ringgit tax relief. And for medical treatment, right? Currently for medical treatment for children with learning disability, the tax relief is actually at 6,000, but they have actually proposed to increase the tax relief from 6,000 to 10,000 ringgit. And all these changes are effective from year of assessment 2026. So 2026 means is that whatever that you incur for individuals, right, is from 1st of January to 31st December 2026, means that it relates to your tax filing by April 2027. So just take note of that these all changes are for year 2026, right? Now, for the next change, right? For the next change, so this is a personal tax relief that I actually really like, right? Because I get to claim some personal tax relief based on the expansion, okay? So as you may be aware, currently there is this 3,000 ringgit childcare relief, but it's only for children aged 6 and below. In the current proposal, what they have actually proposed is that the 3,000 ringgit childcare relief is now permanent, and it actually expands, right, to cover daily care centers or after school transit centers for children up to 12 years old, right? So for me, this is actually a very meaningful shift from the previous age limit of 6 to 12 years old. And it actually reflects the realities faced by working families today, whereby you actually send your children to after school center, and it's usually beyond 6 years old, right? So with this new limit of up to 12 years old, I believe, many of you probably can enjoy this tax relief. Yeah, but one thing to note is that the current relief of this 3,000 can only be claimed by either parent. Okay, what it means is that between husband and wife, then you need to actually agree, right, who gets to claim this relief. So you cannot say husband claim 3,000, wife claim 3,000. No, only choose either one to claim a maximum of 3,000 for this particular relief. Yeah. Next, if you look at the bottom part, right, it's actually relief introduced for household sustainability as well as safety. So initially, this 2,500 ringgit tax relief actually covers expenses incurred for EV charging facility as well as food waste compost machine until year of assessment 2027. It has now been expanded to include household food waste grinders and CCTV system for home use, right? So to note, important point here, right? Your relief claim is only allowed once per item, right? For a period of 2 years, which is year of assessment 2026 to 2027. What it means is that if, let's say, in year 2026, you purchase both food waste grinder and CCTV, right? And you use up your 2,500 ringgit in year 2026, right? Let's say in year 2027, you buy another CCTV. Unfortunately, because you already claimed CCTV in year 2026, you can't claim again in 2027. That's what it means by allowed only once per item, right? But if you time your purchases, right? Let's say you actually buy a food waste grinder in 2026, and then you buy a CCTV in 2027, then each year you have up to 2,500 to claim. Yeah, so you need to actually start thinking about planning your expenses for the next 2 years. Okay. Now, the next relief is in terms of, it's more of what I'll call a reintroduction, right? So to support Visit Malaysia year 2026, so the government actually reintroduced a tax relief of up to 1,000 ringgit for entrance fee to tourist attraction and for cultural and arts program. So if some of you may recall, right, this was previously available during the pandemic years from year of assessment 2020 to 2022. But back then, right, apart from just entrance fee, the relief also covers things like your accommodation as well as your travel packages. Yeah. But just to take note, right, the current reintroduction for 2026 only covers entrance fee. So things like your hotel accommodation, your travel packages, you cannot claim as part of the 1,000 ringgit. And this change, right, in position actually reflects a shift. So during pandemic years, right, the government is actually trying to ensure that the tourism sector can recover from COVID. They're trying to get people out of their houses, right? That's why they actually allow things like accommodation, travel packages. But now, we have actually recovered from COVID already, and it's more to sort of revitalize tourist sector, the Visit Malaysia 2026, and that's why they actually provided this relief, but limited to only the entrance fee as well as the cultural and art program. So to take note, it is only available for 1 year in year of assessment 2026, right? So don't start, rushing to buy tickets for 2025 because it is only available from 1st of January 2026 onwards. Now, for those of you who actually invest in share market, right, you may remember that in last year's budget announcement, right, effective year of assessment 2025, where there is actually this new tax called a 2% dividend tax. Okay, so for investors, right, you will know that if let's say you invest in the share market and you derive dividend income. Dividend income is generally what we call as a single tier exempt dividend. Means that as an investor, if you receive the dividend income, it is single tier exempt dividend means it is exempted for you. If it's exempted means when you fill up your form BBE, you don't have to fill in dividend income because it is exempted, right? So, but what happened is that because I think the government also know that there are actually a lot of people investing in share market, and I guess if you look at it in terms of the disparity in tax rate, right, corporates are paying tax at 24%, whereas actually individual the highest bracket is 30%. So if you enjoy dividend, effectively dividend declared or paid out of corporates actually only suffered a 24% tax, right? So then what happened is that and also as part of widening or rather broadening our tax base, so the government actually introduced this dividend tax effective 2025. Okay, so how this works, right? So dividend actually paid, credited or distributed by resident company. So it means first thing, it must be a Malaysia company. So a Malaysia company pay dividend to the investor. So if let's say the investor's annual dividend, right, income. So when I say annual dividend income, it's not from one company or two company. You need to aggregate all your dividend income that you receive in 2025, right? Okay, and let's say if the total exceed 100,000 ringgit, okay, then the portion exceeding 100,000 ringgit will be subject to a 2% dividend tax. So, and when we actually talk about the investor or the individuals that is need to pay this 2% dividend tax, it actually includes both resident and non-resident individual shareholders. Yeah. So just to give you an example, right? If let's say you receive 120,000 in total dividend in 2025, what happened is that because 120,000 exceeds 100,000. So 20,000 will be subject to this 2% dividend tax. Means that in your form B or BE, year of assessment 2025, you need to declare and pay a 2% tax on this 20,000 ringgit that is in excess of the threshold here. Okay, so this is already effective 2025. But what's new effective 2026 is that if you actually look at it, I'm not sure if any of you are familiar with LLP, which is a limited liability partnership, right? So in Malaysia, there is actually options in terms of a legal setup of a company, right? So you could be setting up a normal limited by shares, a Sendirian Berhad, right? Or you could actually set up a limited liability partnership, a LLP, okay? So then LLP, if they can also similar to a company, right? Company declare dividend, LLP will declare profit distribution, right? Now, so then because in order to align the tax treatment, right, of individual LLP partners with individual shareholders of company, and to ensure an equitable taxation system, right, the same so-called 2% tax has been introduced on profit distribution from LLP. So if you look at the slide, right, the threshold, the scope, as well as the rate, the 2% rate, the one in excess of 100,000 are all the same, right? The only exception is one is the legal setup is a Sendirian Berhad, the other one, the legal setup is a LLP, but both will also be subject to the 2% tax if, let's say, there is a total annual distribution exceeding 100,000 ringgit. Okay, so I actually have just very simple example here. So let's say in this situation, Encik Yusof, right, he's actually a shareholder of P Sendirian Berhad, at the same time a partner in WC LLP. And in 2026, right, if we receive both dividend from P Sendirian Berhad as well as profit distribution from WC LLP, in fact, both, right, all the dividends he received, he will need to assess it separately. Means dividend, he need to sort of aggregate all his dividend and calculate and assess. If he exceeds 100,000, he need to pay 2% tax. Same thing under partnership. For all the profit distribution from the LLP, right, he need to aggregate. So anything in excess of 100,000, he needs to pay 2% tax. So you actually look at these two separately. You don't aggregate everything together, and so means that you have two 100,000 limit. One is for dividend, the other one is for LLP. Okay? Yeah. So these are the key changes, budget changes in respect of personal tax, right? Next, I will actually just move on to taxation of unit trust. So as mentioned, Halogen Trust is basically a unit trust, right? For those who are probably not that familiar with unit trust, maybe I just explain very briefly in terms of how a unit trust is actually being taxed in Malaysia. So a unit trust, right, is essentially a collective investment scheme. So as unit holders, right, you actually invest into a unit trust. Unit trust will pool together the money from all the investor and in turn will then invest in investment assets. And typically, right, the investment assets depend on what sort of assets you invest in. If it's actually in shares, you will get dividends. If it is actually in, let's say, deposits or bonds, and you will get interest. You may actually have capital gains if you dispose investment, other income, as well as foreign income if you invest overseas. So these are what I call typically the sort of type of income derived by a unit trust. Okay, then of course, from Malaysia perspective, right, unit trust is what we call as a tax transparent entity. Tax transparent entity means that whatever tax treatment that the unit trust enjoy, it will flow to the unit holders. So to give you an example, if a unit trust basically enjoy an exemption on my dividend income, on my interest income, then when I actually distribute, right, the distribution to the unit holder will enjoy the same exemption. That's what I mean by tax transparent. The tax treatment or the tax exemption will flow from the unit trust to the unit holders. Okay, but a very common question is that, as a unit holder or investor, sometimes I may have realization of unit trust. So I will redeem the unit trust, I subscribe again. I may redeem again and subscribe again. Then the question is that if you do make any gains, right, arising from the unit trust, the redemption sort of or disposal of the unit trust, right? Then whether do you need to then pay tax on the gains, right? So later on, I will actually explain a little bit more in terms of a concept called batches of trade, right? Which are case law precedents that set out whether a particular transaction is considered a trading or not. But general concept, right? Generally, any gains by unit holders, right? Unless you are someone who is dealing in securities, you are an insurance company or banks who actually actively trade, right? Let's say then on the sale and redemption of the units, generally, apart from those who are considered to be sort of trading, any sale or redemption of units are generally treated as capital gains and not subject to income tax. But whether you can justify, are you trading or you're actually investing for long term, as I said, you need to then assess using that batches of trade criteria. Okay. Yeah. Now, I think I mentioned very briefly earlier, right? So as unit trust industry in Malaysia, there are certain exemptions that has been accorded. So an example is things like the dividend from Malaysia company, it is actually exempt from Malaysia tax. So earlier, right, I actually explained about the 2% dividend tax. So just to clarify, that 2% dividend tax applies to individual shareholders. So if individual shareholders invest in the share, exceed 100,000, you pay that 2% tax. That 2% does not apply to a unit trust. So essentially, if unit trusts do invest in shares, they derive dividend, it will still be single tier exempt dividend. Yeah. Whereas for a unit trust, right, because it is something that is actually promoted by Securities Commission for the unit trust industry. So basically, unit trusts, they do enjoy various tax exemption on their interest income. So it could be interest from securities, from bonds, or from deposits. So all these interests are actually exempted from tax for the unit trust. Yeah. Okay. Some of you may be aware, right, or may have actually heard about this term called capital gains tax, right? So effective 2024, capital gains tax has been introduced on Malaysian unlisted shares, right? But not to worry, right? As individuals, capital gains tax is not applicable for individuals. So essentially, if let's say, right, the Malaysia entity dispose unlisted share, and when I talk about Malaysia entity, it means that it's either a company, a limited liability partnership, cooperative, or trust body. So including unit trust, right? So if unit trust, they actually invest in unlisted shares and they actually dispose it, right? So effective from 1st of March, right? Why I say 1st of March? Because the first 2 months as transition, there was an exemption. So effective from March 2024, if there is actually any disposal of shares in the unlisted Malaysian company, capital gains tax will apply. It's either 10% on gains or 2% on the proceed if you acquired the shares before 1st of January 2024. Now, you imagine, right? If let's say a unit trust, they have been enjoying a lot of incentive, but if today a unit trust actually invest in Malaysia unlisted share, end up if you the unit trust dispose the shares, right? They will then be subject to capital gains tax. Then ultimately, as I mentioned, because unit trust is a tax transparent, right? Whatever taxes that suffered at the unit trust, it will sort of pass on to the unit holders as taxable income as well. Therefore, the industry has actually lobbied to the government. And if you look at number 2 at the right side, right, subsequently in September 2024, the government actually agreed to give exemption for unit trust. So now it's clear that effective January 24 to December 2028, right, even if a unit trust do invest in Malaysian unlisted shares and they dispose it off, there is exemption from capital gains tax on the Malaysia unlisted shares. Yeah. Now, second is actually on foreign source income. There has actually been a lot of, I would say, evolution in terms of expansion on the foreign source income, right? So before 1st of January 2022, I think everything has been all well, right? There is blanket exemption on foreign source income. So whether is it company or individual, even if we bring in money from outside Malaysia, there is exemption. So we don't have to worry, right? But from 1st of January 2022 onwards, right, Malaysia residents are no longer exempted on foreign source income. And basically, Malaysia corporates are also no longer exempted, right? But because you can imagine, right? I haven't been paying taxes on foreign income for so many years. Suddenly you then want to actually tax me on my foreign income that I remit back into Malaysia, right? So there were a lot of noises from the industry and a lot of lobbying that has actually happened. So then eventually, then the government did introduce exemption on foreign income. So there's this 5-year exemption from 1st of January 2022 to 31st December 2026, right? Whereby for companies, foreign dividend can be exempted if they meet certain conditions. But for individuals, right, all classes of your foreign income that individuals receive. So it could be foreign dividend, foreign interest, and so on. But as an individual, if you receive or remit in foreign income, it is actually exempted, right? So for individuals, initially it's exempted up to 2026, but in last year's budget for individuals, they did extend it to 2036, which I will show in my later slide as well. Okay. So this is what transpired in 2022, right? They tackle foreign income first. Now, in 2024, they then further expanded the scope to then cover foreign capital gains tax. Okay, so what it means is that if there is any disposal of foreign capital assets, right? Example, you own a building outside Malaysia or you own shares outside Malaysia and then you dispose and you bring back the proceeds into Malaysia. That is what we call as foreign capital gains. So this will be in scope from 1st of January 2024. But again, right, individuals, because you are exempted on all classes of income, so no worries on that. Companies then, they are given exemption, right? For a limited time, up to 2026, provided they do meet some economic substance requirement. Yeah. And in fact, all this that I talk about in terms of foreign income and foreign capital gains will also apply for unit trusts. So you can imagine again, right, if unit trusts have to pay taxes, right, it will affect the distribution to the unit holders. So as a result, the unit trust industry again lobbied to the government, right, and they did manage to actually get some exemption effective 1st of January 2024, whereby foreign source capital gains, foreign source income. So income, it could be dividend, interest, including any capital gains, right, will be exempted for a unit trust from 1st of January 2024 up to 2026. Yeah. So then if we move on, right, this is actually what happened up to 2024. Then in the recent budget, just 1 month ago, to accord certainty for taxpayers, right, the government has actually also proposed another extension, right, by 4 years. So then if you look at it, so including unit trust, right, initially the exemption was set to end by 2026. Now they expand for another 4 years, means there's a certainty of the exemption for another 4 years up to 31st December 2030. Yeah. And as I mentioned, if you look at sort of the last row, for resident individual, earlier they have already extended the exemption to 2036. So I would say that, there's actually now more room or rather more time, right, for companies to actually bring back foreign currency back into Malaysia. And that's the whole intention, right, of why the government actually extend this, because they do try to encourage people and companies to actually bring back their foreign income from outside Malaysia back into Malaysia. Okay. Now, next that I just want to quickly cover is taxation of digital asset in Malaysia. So I mentioned earlier, right, badges of trade. What is badges of trade? So if you look at the entire Income Tax Act, you wouldn't be able to see something like badges of trade. Why? Because badges of trade are what we call as key tax principles, right, which derive from case law precedents. Means that they were taxpayer that actually sort of challenged the tax authorities to court, right, to determine some of these, I would say, key principles to determine whether a particular transaction is considered capital in nature or revenue in nature. So why the distinction between capital and revenue is very important, right? Because if it is capital, right, let's say if I'm actually an individual or I'm actually a company investing in digital asset in Malaysia, right? So currently capital gains tax is only applicable for companies that invest in Malaysia unlisted share. So if I can actually justify that my investment in digital currency and any gain I made is capital in nature, essentially for that company or the individual, I don't have to pay any taxes because it is not in scope for capital gains tax, right? But if it is actually regarded as revenue, means that I am seen as trading, actively trading in digital currency. Then what happens is that I am seen as trading, then it could be seen as if it is my business income because this is my sort of day job, right, to trade. So then it becomes your business income. So then the capital doesn't apply. It then becomes what we call as a revenue gain, and you become taxable on such revenue gains. Yeah. So there are many criterias, and you actually need to look at it in terms of on a holistic manner, right? In terms of all the various criterias. So things like what is the subject matter, your length of ownership, frequency of trading, how do you finance, right? Is it, if you get a short-term financing, tendency is more for trading as opposed to long-term, so on and so forth. And what's your motive, right? So all these things, you actually need to look at it on a holistic basis, then to determine that, am I considered trading? And therefore, if I make any gain, I have to pay tax. Or this is essentially my long-term investment and I can prove it with facts, right? And therefore, even if I make a gain, it is capital in nature. Yeah. So that is long and short what badges of trade means. Now, why badges of trade is important? It's because when the tax authorities actually issued the guideline, right, in respect of tax treatment for digital asset, they actually use the concept of badges of trade in crafting this tax treatment. So to give you some examples, so there were specific transactions that were set out in the RB's guideline. And first, for example, we talk at digital currency trading. So if you are someone who actually buy and sell digital currency as part of your ordinary course of business, then it's trading. Based on the guideline, you are actually taxed. Okay, so same as I said, the concept came from that badges of trade, right? So if you're doing things like mining and you receive a fee because you're actually sort of providing a services, fee is of course subject to tax, right? But if let's say you make a gain on disposal of token, again you need to look at it. Is it capital or revenue in nature? Capital is not tax. Revenue, then you will basically need to be taxed, right? But if let's say, right, in future, I know Han mentioned earlier, is like, hey, today, right, you cannot use your crypto to pay for a coffee in cafe, right? But let's say in one day, or there is actually potentially, a vendor that accepts cryptocurrency, right? Then essentially, when we comes to, let's say, recognizing cryptocurrency as a sale or for you to pay expenses, right? Then essentially, whatever digital currency that you receive, it will be sale, but you need to value it in ringgit at open market value. Same for expenses as well. So means that how you record for your profit and loss, if you actually use digital currency to settle payment, it will be in that manner. Okay, so if I were to continue, right, again, things like if you pay salary and wages in digital currency, so again, it is no different from if you receive cash, right? Of course, you need to pay tax on the employment income. If you receive it in digital currency, same thing. It's a different mode of payment, right? And if you actually look at, I guess the rest at the end of the day is looking back at that same concept. If you actually trading, you active systematic investment activity, then it's business, right? But then if you actually, look at it from a perspective, you're more passive investor, you just invest, you don't really actually sell, it's not really active, then potentially you can argue it is what we call as a capital in nature. Okay. Now, if we move on, right? One of the then key things. Sorry, Jaying, are you controlling? Can we move on to the next slide? Okay. Yeah. So one of the key issues, right, because if you do have, for example, a gain, right, proceeds generally because you are disposing it today, right? You know how much you're getting. But then how do you then determine what is the cost of acquisition for your digital currency? Because you could have been buying it over time at different value already. And now you're actually so-called selling it or realizing it. How do you then calculate your gain? So as I said, proceeds you will know, but what about your acquisition cost? So a few points to note, right? Your amount or your value must be in ringgit. So no matter what, you must convert it to ringgit. And generally, the RB can accept what they call as a first in, first out principle. So if you first bought a digital asset 10 years ago, and you are able to trace, right? Then, okay, when you take the acquisition cost, you go on first in, first out, whatever value as at that 10 years ago, for example. Unless you can demonstrate to them that, hey, there is a slightly different way on how you want to sort of determine your acquisition cost, right? And let's say if your acquisition cost somehow cannot be determined because 10 years ago, you cannot remember the value already, then you can be valued using our fair value, right? But it will be determined based on the prevailing rate on that transaction date. Yeah, okay? And based on the verifiable digital currency exchanges, okay? Yeah. So with this, I've sort of actually covered already all the taxation update, right? So hope that you've actually managed to gain a little bit in terms of the tax update. Back to you, Jai.
Thank you so much, Han and Tianyi, for the very valuable insights. I think we have quite a number of questions that are in line. So, but to quickly summarize, in short, if you're looking for a licensed and professional fund manager to manage your crypto funds, Halogen is definitely the way to go. And on top of that, for unit trust funds, I think Tianyi has already clarified that there are exemption and there's no capital gains tax for unit trust funds. So good news for crypto investors here who are looking to invest in crypto via a unit trust vehicle. So I think I'm gonna go into the Q&A already. So we have quite a number. Okay, let me go with. All right, I think we have a few pre-submitted questions to begin with, and then we will also go through the questions that are asked in the Q&A box. But let me go through one by one. So I think this is for the first question. This is also asked by quite a number of people. And yeah, question one. So what happens if our Halogen wallet, or basically, I think there's another question earlier, if Halogen goes insolvent, what happens to our investors' money here at Halogen? Maybe Han would like to take this up.
Sure. I'll do that. Thanks, Tianyi, for that insightful sharing. I think I pick up a few new things as well. I always pick up new things from you. This question we get a lot, which is we have a app called Halogen Wallet where investors can log in to see their unit trust balances and for our portfolio members as well. Sorry, those who invested in private mandates, they can also see it. So we are also a fintech company. I mean, for us, luckily, maybe the name wallet was not the best name, but it's still okay. Because we don't actually there isn't any crypto held on the wallet. It's not a crypto wallet, right? So even if Halogen wallet gets hacked, what the worst thing that somebody can do, I guess, is to redeem your funds back to your own bank account. So for me, that's fortunately, like, that's one way. The second way is if someone steals your units. Well, no, because Halogen actually has records of your units with the trustee, right? So for me, it is just a platform for you to see your balances and invest and redeem transactions. So don't worry, your crypto won't be lost if anything happens to Halogen wallet. But don't worry, we do comply with a lot of the RMIT stuff, risk management and technology stuff that the SC and Bank Negara put on us. So don't worry too much about that. The bigger question, I guess more interesting, is what happens if Halogen disappears tomorrow? And this is actually a very important question, right? And I mean, I can't say so much for other platforms or other exchanges here in Malaysia because I know they don't have this kind of legal requirement. But as I said before, one of the legal requirements we have to run a unit trust fund is that the assets must be held by a trustee on behalf of fund managers. So actually, whatever happens to me is actually irrelevant. So like what I mean by that is if Halogen disappears tomorrow, you just call the trustee and say, hey, all my assets still there, right? Trustee should tell you, yeah, it's with me, don't worry, it's with the trustee rather than with the manager. And this actually even differs from exchange and a bank. The bank doesn't have a trustee account for you. It's actually own risk. And that's why you go like, okay, but then where's your PIDM? The point here is you don't even need PIDM when the funds are actually not with me, right? The funds are actually over there. Having said that, there is something called SIDREC, Securities Industry Dispute Resolution Center. If you feel that I've done anything wrong or I've not behaved properly, you can. There is investor coverage up to that 250,000 also, right? But it's not about insurance; it's about disputes.
All right, I think that's for the first question. Next question, also a highly asked question. Are staking income or airdrops considered taxable? So maybe over to you, Tianyi.
Yeah. So in terms of, I think you get staking income because you do additional staking and all those, right? So then yes, like it could actually be subject to tax if these are actually activities that you've actually undertaken to derive the income. Yeah.
Okay, next question. Okay, do you have examples or case studies or calculations on how crypto gains, staking, and trading are taxed personally?
Okay, yeah. So maybe I just explain this, right? If let's say you are an active trader and you have actually determined to say is that, you know, any sort of gain from crypto is subject to tax, right? Then what happened is that, let's say if you were to sell or realize that crypto today, you get that proceeds, right? Then the next thing is that, of course, you cannot tax the whole proceeds, right? Because you do actually incur certain costs when you first purchase the crypto. So then the tricky part is that how do you then determine your acquisition cost? Because, you know, generally you buy crypto over time, right? You buy crypto over time, and then over time, some of this could be already jumbled up, right? So if you do keep a proper records, right? Then when you dispose, I think I mentioned earlier, right? RB did provide guidance to say that you can also go on first in, first out. So the example I gave was like, hey, let's say when you first purchased 10 years ago, right? Then and you can trace that that one, say, crypto purchase, then one crypto you sell today, then you can actually use your proceeds and your acquisition cost to calculate the gain. And of course, then you tax it, if on a personal basis, then you tax on a personal tax rate. If it's a company, you tax based on the corporate tax rate lah. That's why that will be sort of that basis, right? If you have your actual cost. If let's say due to whatever reason, as I say, 10 years ago, right, you know that you bought one unit of the coin, of the crypto, but then at the end of the day, maybe you say is that I don't have the slip to show how much I paid for it already. What you can do is that you can search back on the value 10 years ago and then try to determine, okay, what is the fair value based on the exchange, the sort of the digital exchange platform, and then use that to substitute the acquisition. If you cannot find documentation on how much you paid for in the past, generally it's also an acceptable method.
Okay, Ken, let's go to the next one. So how does the business, Sdn Bhd in this case, accounts for crypto in the books, either as an intangible asset or inventory? Maybe both would like to chip in on this?
I know Tianyi is a tax advisor, not auditor, right? But like
Yeah,
for us, what we've seen, but what we've seen is before, for the longest time, it was treated as intangible asset, IAS 21. But more recently, there has been push locally to classify it as an investment asset, mainly because of the SE classification. That's not been set yet, by the way. So MFRS is not updated to reflect this. Having said that, one of the reasons why people use us at Halogen is because a unit trust investment is classified as either short-term investments or long-term investments in a company's book. So it's very easy to account for that. And then naturally, as a corporate, you get a lot of those tax exemptions working with a unit trust fund manager too. So I guess that's a little sales pitch, sorry, to answer the question also. But what we're seeing is previously intangible assets, they are looking into changing that to reflect the actual nature lah. Yep.
Okay, Tianyi, anything to add, or we can move on?
Yeah, I think Han has actually addressed it very well. No more input from me.
We can next are frequent subscription or withdrawals from a local sukuk bond fund or bond fund taxable for a corporate investor?
Okay, yeah. So I guess it depends, right, in terms of the corporate investor, what exactly is that profile? I'll say profile of the corporate investor. So a general principle is that if you are seen as trading, right, and especially for some, like if I'm trading in securities or your insurance or banks and all those, then generally these are regarded as a trading activity. But if you're saying is that, hey, I'm not under those category, again, because it is actually based on badges of trade, case law principle, you need to actually look at the facts of your case, right? So why exactly are there frequent subscription and withdrawal to the local sukuk and bond? Is it because you are actually actively trading, right? If you are actively trading, then from a tax perspective, it could be regarded as revenue gain, unless you're able to justify, right, to the tax authorities to say that, hey, I actually intend to hold for long term, but due to whatever reason I had to realize it, then there may still be some possibility for you to argue it is capital in nature. Therefore, long and short of it, right, it really depends on the facts of your case, and you need to be able to produce documentation to support whatever basis that you're trying to take, whether is it considered trading and therefore taxable. Of course, if you trade and you bring it to tax, then tax authorities won't say anything, right? They happily accept your tax. But if you try to justify that it's for long-term investment and it's due to certain circumstances that I had to realize it, and it's not frequent and all, then possibility, yes, you need to justify with documentation.
Okay, so based on your case. Okay, next, if I realize profits from crypto assets on an overseas platform but never actually remit them to Malaysia, are they subject to tax? Should I report them to LHDN?
Okay, so
Okay.
if you do have, this is what I call that it falls under foreign source income, right? Foreign source income will only be triggered if you remit it into Malaysia. If you keep it in a bank account outside Malaysia, you don't bring it into a bank account in Malaysia, then it is not considered remitted. Okay? But the thing is, remember, what I mentioned earlier, right? I guess it depends. If let's say you are an individual, then you don't have to worry, because as an individual, right, so far you do actually have foreign source income exemption up to year 2036. But let's say this is a corporate, right? For a corporate, currently foreign source income, the only exemption is dividend income. So if you, as well as there is also foreign capital gains, but you need to meet certain requirements. For example, the company must have substance, right, in order for you to enjoy some of these exemption. So you also need to look at it, because the context, I wasn't too sure, is it more individual or corporate? Yeah.
Yeah.
But if you're exempted, then yes, you don't have to report.
Yeah. I think also depends, Tierney, on the activity that you realize the profit from, right? If it's a trading income, then it's still taxable, regardless of
For
whether
corporates,
you. Yeah.
yeah. For corporates, if it's trading income, because for individual, regardless capital or I guess revenue is not lah. Yeah.
Wait. Oh. Wait, hold on.
You have to reshare it, Jay.
Everyone.
Yeah, to go out and reshare it. Update's not there. Thanks.
Okay, got it. Okay, we're gonna take up some questions from the floor. So first question by Huan Yai. So assuming I bought crypto in March, July, and October 2024, prices increased then. I sold 20% in November 2024. If it's deemed business income, shall I recognize it as an income when I sell it in the future, or shall I recognize income as every year, at every financial year end?
Okay.
Maybe
Yeah.
for
So maybe I can take this question, right? So if let's say you have determined that this is your business income, if this is your business income, then you should only tax it when you realize it. Realize means when you sell. If at the end of the day you didn't sell in a particular year, let's say 2025, end up you didn't sell anything, then nothing for you to report.
Okay, next question. Okay, I think quite an interesting one. So to Han, perhaps, by Jen Low. So does Halogen provide OTC services for off-ramping to ringgit?
We are not OTC broker. However, like we do have many investors who may want to they have crypto, they have ringgit, they have crypto in all forms lah, Bitcoin, stablecoin, whatever, and they want to change their portfolio allocation, right, between crypto and not crypto, so including ringgit or ringgit assets, and we certainly help with that lah, in our mandates.
Okay, next one. Okay, I think personal, this is more on the personal income tax. Yeah, Tierney, do you want to go through a quick one on this?
Okay. This one, currently for this, the finance bill hasn't been issued for CCTV yet. But in terms of the EV charging, I think if I recall correctly, there doesn't seem to be a limit separately for husband and wife. Yeah, I'm not sure whether I can check.
Okay, we can check and get back to you, TK Kwa. Next, by Dennis Lee. So does IRB have jurisdiction to impose tax on assets stored in a crypto cold wallet?
Maybe can I clarify the question a bit for Tierney, so easier for her to answer lah. So I think first you must determine what you mean by tax on assets. We don't have wealth tax here in Malaysia, right? So that's first. If you just have an asset in your wallet, I think you're fine. If we don't have wealth tax. However, if there is, I don't think there is a differentiation between what kind of wallet you use if you have a specific taxable activity, right? So if you trade trade using your cold wallet or offline wallet, or you make capital gains, then it's not so much about where it is, right? Then the last question, I guess, is when you say cold wallet, is it considered overseas foreign sourced capital asset, or is it a locally sourced capital asset? So those two questions lah.
Yeah, yeah. Okay. Yeah. So because I guess again, when we actually look at, if you're saying it's just stored there, right? If there is no activity, trading and all those that derive a gain, then basically you have nothing to report, right? And then I guess the next question is that whether this is, again, like what Han mentioned, is it foreign? Then individuals, you will actually enjoy exemption if you do remit it to Malaysia, or unless, let's say, again, it depends back on your activity. So what exactly are you using this for? If it's just storing it and you don't do anything with it, you just let the value accumulate, then there is no taxing event per se.
Okay, a few more. How may I know, by Li Ling Poon, may I know how to declare tax if the income is from crypto staking?
Okay, so what happened, right, is that you could actually disclose it as other income. Yeah. Because for sure, I mean, it could be either other income or part of business income, but generally, for a tax rate will still be the same. But if you actually look at it, because there is no, I would say there is no clear guideline per se in terms of how they do indicate it, as in, do you put it as business or other income? But again, if it's something that you do as your ordinary cost, then you probably need to put it as more of a business income.
Okay, so that's for question 11. Okay, next
Hmm.
one. My LLP formed in February 2025. I've profit up to October. Can I distribute profit now to avoid the 2% additional tax? I think this is more for corporate tax.
Correct. I think this is spot on, right? Because the new LLP tax, right, 2% tax is only effective 2026. So if you have any distribution from now until 31st December 2025, then it will not be subject to this 2% tax.
Okay, next one. Okay, quite a lengthy one. Question 13. My salary is paid in stable coins. Can I legally recognize it as income in Malaysia to declare income tax, etc., after I exchange the stable coins for ringgit? The exchange of stable coins to ringgit may be done via a few avenues, with Halogen Capital's prior mandates, through a P2P exchange, through an SC registered digital asset exchange.
Okay, maybe I'll answer this part as well, right? Now, in the guideline, they actually did cover one section in terms of paying of salary and wages, right? In terms of using digital currency. So then they have actually clarified that the treatment will be value based on your employment contract or the value of the employment services that you provide. So to give an example, right? If let's say based on your employment contract, you are supposed to receive salary of 10,000. So they will actually give you a digital currency equivalent to 10,000. Then this 10,000 is what you need to declare as your employment income.
Then, okay, by Muhammad Zafran. So for how long do I have to hold the crypto in order for it to be considered capital gains and not trading? Any insight?
Unfortunately, Malaysia, right, we don't have a specific threshold. Example to say, oh, so long I hold more than 2 years is capital and things like that. We don't have this sort of thing. So it is still very subjective, and it is really depending on the facts. So what the tax authorities will usually look at is that they will look at the trend, right? Your facts, your trend to say, hey, what have you actually done throughout the years? What activities have you actually done? And to determine whether, are you actually, is it really capital or is actually trading? So unfortunately, there is no sort of threshold in terms of timeline or period of ownership to determine whether is it capital or revenue.
So if you invest in Halogen's money market fund or crypto fund, the proceeds when we cash out are not taxable. So Han, maybe you want to confirm this again?
I think it's more for Tian confirm, right? Which is the separation of the
Correct.
the tax transfer. So we as far as I understand from Tian's presentation just now, and as far as I know lah from outside, it's like we then get the tax exemptions as a local unit trust here. Then from there, like there's a breakage of, as in there's no requirement for then the investor to be taxed twice. But let Tian answer better than me lah.
Okay, yeah. So of course, if let's say there's any distribution, right? Distribution will actually follow the tax treatment. So if it is exempt, unit holders will also be exempted on the distribution. But I guess when you say proceeds, right? I guess you're saying that, oh, what if you were to redeem the unit trust, right? So actually, again, it goes back to your badges of trade, right? If you actually actively, subscribe, redeem, and all those, could it actually be regarded as potentially, trading? But generally for individual, if you're saying that a unit trust is really for my investments and all those, then really, you need to justify why you're not seen as trading, that is actually more for your investments. Yeah.
Okay, maybe this is for Han. So what is the strategy to invest in digital asset unit trust funds in terms of investment horizon, choose funds based on risk appetite, ringgit, cost averaging, any strategy that we would like to share to full whole seat.
Wow, how to answer in 1 minute? How to answer in 1 minute, but I try. So for me, there's two parts to this, right? The first is what is your intention? Do you intend to you want to trade, you want to use us for kind of a more shorter term trading vehicle, or you want to use us for your long-term in retirement planning? So it really depends on you first, right? If you're just saying, okay, general investing, I want a 5 to 10 year period, that's fairly long, right? Then for us, we always recommend, look, you have to get involved in this asset class, put a little bit of your overall portfolio. If you have zero, get off zero, start investing. Yeah, you can dollar cost average, that's a good idea. But with all digital assets, what we're seeing is very rare that long-term investor loses money. So you hear of these stories of people losing money. I invested in crypto, digital assets, I lost 50%, 60%. Those are typically people who have not thought of it in an investment framework. It's high volatility, high return, suitable for only a little part of your portfolio to just juice up your returns. So long story short, have a bit longer term horizon, add something between 2, 3, 5, 10% of your portfolio, depending on risk appetite, you just toggle. And if you have none at the moment, it's worth getting a little out of your whole portfolio in there, right? And then hold it for general investing, slightly longer term, right? And this slightly different behavior, yes, you're using the word investment, right? You're not using the word tactical trading income, right? So for me, that's kind of the big difference in how you also word the question. Tells me that you're looking for long-term investment.
Okay, I think those are mostly the questions that we have. Maybe one last one by an anonymous attendee. Probably back to one of the slides that we shared earlier. What benefits does Halogen offer compared to an ETF that I can buy from a trading platform? Maybe to Han. Yeah.
There are a few depending on who you are. I'll name a few. It might be relevant to one of you, some of you, all of you. Some may not be relevant, but I'll go through it in detail. The first is that naturally, as a locally domiciled unit trust, we get a lot of the tax exemptions from being a locally domiciled unit trust versus overseas assets. So for what I mean by that is you might be subject to the tax jurisdiction of that platform, or sorry, that domicile. Means in the US, withholding taxes, capital gains taxes, you are technically they call it non-resident alien, right? Which has different tax treatment to a local person there. So you get all the tax benefits of being here locally. Number two, again, relevant to some of you, but not to others, we are fully Sharia compliant across all our crypto funds. This is something that matters to a large segment of our investor base. And number three, other than just foreign source income, there is also something in Bank Negara called Foreign Exchange Policy Administration, which obviously if you're investing overseas, you just have to make sure you're within the specific bounds. We are not a fully FX foreign exchange open country. So there are some policies that you need to follow, and Bank Negara does watch those very closely, and banks regulate that on behalf of Bank Negara. So that's one thing that people, especially larger sizes, don't want to deal with. They don't want to be flagged up as potential breach of foreign exchange policy. And last, and actually quite important, is that we outperform pretty much every ETF that's out there at the moment, right? We've got a kick-ass trading team here. Look at our track record. Why invest overseas? Usually the reason is I want to outperform overseas, but here our funds pretty much outperform every single ETF that's listed on foreign exchanges. So for me, that's kind of, hopefully that matters to some of you also, performance.
All right, I think those are some of the questions that we have and the time that we have for this webinar. So I just wanted to say thank you so much. I think there are still about 200 plus of you here. So thank you so much for all of you for joining and for your very, very active participation, and not forgetting to thank Han and Tianyi for their very valuable insights as well. So we appreciate your time and interest in staying informed as Malaysia's digital asset landscape evolves. So I think this concludes our session for today. I think if you have more questions, just reach out to us either via our website or our social media. So we are more than happy to pick the questions up. And if you're interested to get started with us, you can see on the screen, there's a QR code here. You can feel free to scan and can begin an account, start an account with us, or you can just head to our website. So all the information that you want in terms of what our fund is about, our crypto fund offerings, in terms of its performance as well, you can get it via our website. So that concludes today's session, and yeah, we look forward to seeing everyone in our next webinar. So yeah, thank you so much everyone for joining, and we will see you in the next one. So have a good day. Bye everyone. Thank you so much for attending.